Welcome to IG Singapore, where we bring you practical insights and tools to navigate the financial markets. In today's video, we're looking at Bollinger Bands, a classic indicator that helps you measure volatility and potential breakouts. Bollinger Bands consist of a moving average in the middle and two bands set above and below based on standard deviation. When prices move closer to the band, it tells us something about volatility. Let's walk through 4 key ways to use Bollinger Bands in your trading. When the bands contract, it signals low volatility. This often precedes an expansion phase or a breakout move in price. In a ranging market, traders may buy when prices near the lower band and sell at the upper band, using the bands like dynamic support and resistance levels. The Bollinger Squeeze is a well-known pattern. When bands narrow significantly, volatility is low. A breakout in either direction often follows soon after. Bollinger Bands adapt to market conditions. They are useful in both trending and range-bound markets, helping you time entries and exits based on volatility. You can apply Bollinger Band on IG's platform with just a few clicks. Adjust the settings to match your trading timeframes and set alerts for breakout zones. And that's how Bollinger Bands can help you identify volatility and potential breakout opportunities. And as always, don't forget to like and subscribe.